So I'm starting our
Great.
recording right now as well. So we are officially live on Facebook Live. How you doing, Benny?
I'm doing well, sir. How about you?
I'm doing well, man. Global Empowerment Team in the building. This is episode number 2, officially labeled episode 102.
Yes.
What's our topic for today, sir?
Oh man, it's been so many different things going on since we last had our last episode. So this one, it's kind of a market trends, market update. What's going on in the market right now for life insurance and insurance market, as well as real estate market. There have been daily changes going on, and and just kind of went over some information over the month of, well, actually since February, as to the implementation of the stay in shelter, and just kind of went over some numbers in my world in real estate, and kind of assess what's been going on this time versus say this time last year, and before obviously the hit of COVID-19. What about yourself?
Man, yeah, just noticing these different trends that are going on. Looking forward to our topic. Hanging out with this family. I mean, a lot of the same things. Just getting what I'm worried about now is I'm getting so acclimated to this pace, this lifestyle, the stay at home, the shelter in place, that when it comes time to go back, like, what they say, it takes you 3 days or something like that to pick up a habit, but 30 days to get rid of the habit. So
something like that. Yeah. I mean, and where we are now, so it was February, right? February when we first went into the stay in place. So now we're going into the first week of May. So it's been well over, and I've heard of a number of different numbers as well, 3 weeks or 90 days to establish a new habit. So we're around those numbers now. And so people, and I've been hearing that, it's the consensus of people saying that they've become accustomed to working from home now. They're getting used to working in their offices now. They're getting some type of flow with their kids, doing homeschooling, as well as still being able to be productive in their work, their work fields. So yeah, it's definitely going to be another adjustment, and especially for people who have to deal with that traffic, dealing with a long commute back and forth to work. I think that's going to be the biggest grind, when we go back to some sort of normalcy here.
I think it'll probably be worse those first several weeks to maybe several months, because you're going to have a lot of people that maybe didn't go into the office all the time that now will be going into the office all the time, whether it's making up for lost things that they could have done in the office and got accomplished, to where now it's going to pick up a little bit. So those are some of the things that, honestly, with me doing a lot of my everyday business close to home, I'm not really that affected by it, but I know some people that do drive pretty far for work that will be directly affected by it. So
definitely. Yeah.
Now, before we go any further, I do want to let people know, turn on those post notifications so that when we do post our videos, and they will be coming weekly from now on, but when we post our videos, you guys get notified about it. Also, we're going to start our YouTube channel. So these videos will be on our YouTube channel. We're going to start adding more content. So between our YouTube channel, our Facebook channel, I want you guys to make sure you hit the subscribe button, hit that plus button, hit the likes, turn on the post notifications, just so that we can continue bringing you guys content that you're looking forward to. And don't be afraid to comment as well. So
yeah, definitely. We'd love to find out what kind of value, what kind of information you guys would like to know about specifically. That way we can kind of fashion these videos along with what your particular needs are. And then, we're like I said, we're kind of, we do this daily. We're reaching out to our clients, and we do this our individual careers full time. So we're definitely abreast to the different changes that are going on in the different markets. So if there's anything particular that you want to hear, any particular topics that you guys want to talk about, please let us know. We also have a couple of different interviews coming up. So we'll be interviewing some lenders, kind of discuss the lending world and how COVID-19 has affected that market and what's going on with the different loan programs that are currently available. Then also we'll be reaching out to a couple of other real estate investors, stock market investors, just some other professionals in different industries, just to kind of give feedback on the whole effects of COVID-19 and just business as usual, business moving forward in this shift of market.
Yes.
So we'd definitely love to hear from you and get your feedback and comments.
Exactly. and I've reached out to some people. So I'm looking forward to some of the guests that between Benny and myself, we have a really large network. So I'm looking forward to seeing what type of guests we can bring in and switch up the atmosphere a little bit and educate our community about not only things in our particular fields, but things that are of interest in everybody's everyday lives. And I see my cousin,
Yes.
Tima Mack, said, "Hey, cuz, what's going on with you, Tima? Love you. I ain't seen you in years, but I love you. I follow you on Facebook. Continue to watch and see some of this content that my partner and I are putting out there." So, Benny, I know that you have, and that's what I love about you. The reason why you are my partner in not only business, but life moving forward is because I love how organized you are, how detailed you are, how put together you are. And you sent me this presentation earlier today, and I love it. So if you don't mind, since we're talking about trends that we're both noticing in our perspective and respective fields, I would like for you to maybe start off because you've got such a great presentation, if that's okay with you. And then
Oh,
I'll
definitely.
maybe,
Yeah, let's go. Yeah,
I'll
and
let
that's
the,
one of the things that we do in our business, man. We have to measure, measure our systems and kind of, dial in what works best. And everybody knows numbers, so we can sit up here and talk about the market and talk about how things are going and give our point of views. However, when we dial in and pull out the exact numbers of what's actually going on in the market, that right there speaks volumes. So this is a 5-county market trend that we put together. So going over some of the northern Bay Area counties, so Napa, Solano, Alameda, Contra Costa, and San Francisco counties. So I keep getting questions about what's going on in the market now. Is it a good time to buy? Is it a good time to sell? Should I wait now? And those are questions that actually come up year round, different markets, different shifts of markets. I was hearing the same question last year at the same time. So to kind of dial in right now to talk about what's going on in the housing market with the effects of the COVID-19 pandemic, the volatile stock market, the oil crisis that's going on, the raising unemployment rate. So if we go to the next page, Khalil, let's show the numbers. So and I pulled these numbers from February, March, and April. So these are throughout the months. These are the numbers for the months. So this is the county of Napa. So there were 66 new homes to market, active new homes to market from February 1st through February 29th. 84 March 1st through March 31st, and then 88 from April 1 through April 30th, 2020. Now,
what do you attribute that increase to, if you don't mind me asking? Because it increased each month, even though it was only 4 months from 4 homes from March to April. Are you attributing that directly to the COVID-19 crisis, or are these trends the same that was happening last year? Maybe it's just this particular time getting close to summer. What are you guys seeing with that?
Well, it's interesting that you brought up last year. So when we get to last year's numbers, you'll see the drastic shift.
Okay, I'm sorry. I'm jumping ahead.
So no, not at all, not at all. And that's a good question as far as the months right now. What we're looking at from February, March, and April. So these are obviously real estate is a cyclical business. So this is kind of a normal trend. We're looking at February, March, April. So we're gearing up to our busiest time of the year, which is in summer. So you got to think about these single-family homes. Most single-family homes are owned by families. So most families wait till the summertime when their kids are out of school to start moving, to either buy or sell their properties, right? So summertime is traditionally always the busiest time of year. So these are numbers that we would anticipate seeing, where now we're seeing an increase as we get closer to spring, closer now to summer. So this is very normal. However, if we were to compare it to 2019, and we go to the next slide. So if you look at the orange, the lines in orange is 2020. The line for 2019 is in blue. So for February and March, they're not even on the map. So this time last year in February and March, it was zero new homes to market.
On the market.
Zero.
Wow.
So even in the midst of COVID-19, right now, the numbers, look at this, the numbers speak for themselves.
Wow.
It is still a really great time to buy and sell. People still have real estate goals that they are accomplishing. And what we have done is we have just pivoted and taken advantage of this shift in the market with utilizing the technology that we have already had in place. We could do a transaction from A to Z all via your cell phone. Obviously, we utilize the tools of the Zoom, and I'll get to a little later on, also with the different changes that have recently taken place in a couple of counties with the restrictions for realtors. But we have the ability to take care of our clients' needs and then still provide them with that, with that face-to-face, what obviously through technology, and obviously still have a person that you could reach out to that'll walk you through the transaction.
Mm-hmm.
So yeah, so these numbers right here, and this was in Napa County. So Solano County, we have 75, and you can read along with me. 75 in February through February 1 through February 29. March 1st through March 31st, 107. April 1 through April 30th, 205. So we're seeing that natural increase, right?
Nice.
So
that's a big jump from March to April right there. And these are from 75 to 107. That means that there are 32 new homes that are put on the market, or that's in 107 completely different homes than the 75 the first month.
No, those are new active homes coming to the market. So when I do the search, it is new and coming soon properties that are active on the market.
Nice.
Yes. So again, the conversation in 2019, we were speaking to a low inventory. It was definitely heavily weighed in seller's advantage. It was a strong seller's market. And this is the reason why. When there is low inventory, it is a seller's market, because there were still a lot of buyers out there. However, it wasn't too many homes available. So buyers knew that they had to really put strong offers in to acquire the properties that they really wanted. And that's primarily the reason why right there, because there was no homes on the market.
That was a great point you just made, Benny. So the more homes that there are on the market, if I can go back to here, that's what entails a buyer's market, because there's so many options. If I don't get the home from you, there's somebody else selling a home. I can go get the home from them probably for my price. But when there's 2, 3, 4, 5 homes, that's what's called the buyer's market. Or it's vice versa.
It's supply and demand. It's a supply and demand. It's that simple strategy right there. That theory right there. It's when there's more demand, it's then obviously the prices go up because it's less inventory. If it's more inventory, less demand, now you have more weight with the buyers. Now the buyers can kind of pick and choose what type of properties they want to buy.
See, that's one thing I also tell people about a lot of these other investment tools that you get involved with. There's a lot of contingencies. There's a lot of different factors that go into the price of buying a home. It's about timing. It's about the market. It's about all kind of different things that can go into the location. There's all kind of different things that go into buying a home. When you're buying a stock, it's about the timing, about the inception of the stock. Is it IPO? What level is it at? All these different things that go into it. When it comes to life insurance, the contingencies are health and age. The more mature you become, the higher the prices come at that point in time. Like there's only 2 houses on the market at that point in time, so to speak, because your age is so high. When your health is kind of bad at that point in time, what it does as well is it increases your price as well. So it's important. I'm glad we're going over this, because it's important to explain to people the differences in the different strategies, the differences in the timing with the strategies, the difference of the different factors in each of these strategies. And right now we're clearly going over what entails a buyer's market, a seller's market, regardless of pandemic, regardless of fluctuation of different things. It entails right now exactly what to be looking for. And this is huge.
Yeah, definitely. Yeah, and same thing. So, I mean, as we go along through these slides here, Alameda County shows the same things. Alameda County. Then as we go, where do we go to Napa? We've already got to Napa, San Francisco County. The numbers right now this year are drastically higher than what they were this time last year.
Wow.
So to answer everyone's question, whether it's still a great time to buy, whether it's a good time to buy right now or sell, yes. Buyers are taking advantage of the historic low interest rates. Obviously, with COVID-19, some of the markets the market has been affected in the loan lending side. So when we're speaking to luxury homes, if we're speaking to homes over $1 million, over $900,000, then we're talking about specific type of loans, jumbo loans. Those type of loans have pretty much gone away with a lot of different investors. I do know of 2 banks right now that are still currently utilizing jumbo loans. However, the restrictions are a lot higher. So some of those restrictions are higher interest, higher FICO scores, more reserves in the bank. So those are that right there is the biggest changes in COVID-19, with COVID-19 in the real estate market, and how people are purchasing homes. Cal HAFA, they've made stricter regulations as well. So FHA, federally backed loans. So with those loans, the reserve rates have gone higher. Interest rates, the interest rate is still low. However, the FICO score criteria has gone up.
Okay.
So with all that being said, it's still an opportunity to take advantage of, more inventory in the market. Some of the pricing in certain areas have been leveling off. Some in some more desirable neighborhoods have still been going up. So it just really depends on your specific, neighborhood, your specific home style. So, I mean, if you want more details on what the situation will look like for you and your particular home where you are, give us a call and we can walk you through that process.
Nice. Can you touched up on the FICO change and the criteria changing for FICO. Can you touch up on that for us?
Yeah, so some of the loans, the minimum FICO scores have gone up. So obviously with the lending world being a lot more volatile, with the stay-in-place shelters and also the relief on rent and relief on mortgage, some investors are looking at that as a very volatile situation to get into. So we've seen some loans actually that were available in February, January, or this time last year that have been taken off the plate. So they're no longer available. Investors are no longer backing those loans. And then also, like I said, some of the loans that are still currently available, they've raised the restriction levels on how or what status, what financial status a borrower would have to be in to be approved for that particular loan.
Okay. Now, what was the minimum score before? What is it now? Was the jump drastic?
It really depends on the program. So that question would definitely be for, when we have our video with our guests from Lending World. So they could definitely give more specifics for the different type of loan programs that particular mortgage company still offers, and then go over what the requirements are for those particular programs.
Okay. Now, one last thing, what about the interest rates? How have the interest rates risen, dropped, gone up, going down, whatever it is, fluctuated, and how has that, obviously, we see that homes are for sale in abundance, but what about people purchasing homes? Has that gone up as well? Has that risen? Are the interest rates affecting people? Is the bottom line FICO affecting people from becoming homeowners? Or I know you deal in the luxury market as well. That's one of your main things. So I assume when people are looking at luxury homes, a lot of these things aren't applicable to them because they've got their credit score at a certain place. They've got the loan, whatever it is, they've got certain things in place when it comes to purchasing a luxury home. But what do you see the interest rates, the trends with the interest rates, and how is that affecting people becoming homeowners in the luxury department or not in the luxury department?
Well, the luxury world is in single family homes, as I say, under 900,000 in the Bay Area. It's kind of a different realm. There are norms that are more attributed to a luxury that aren't attributed to, say, a single family home at $500,000-$600,000. So, for instance, how long they stay on the market, average time that they're on the market is obviously much higher for a luxury home than it is for, say, a $500,000, $400,000 home in Vallejo. We've seen homes at that price point go and get offers in the first day, get multiple offers in the first couple of days of it being on the market. Whereas a luxury home in, say, Napa, it may be on the market on average day of right around 90 plus days. So that right there is more of a normal trend that we see, the difference between those two price points. And then also the type of buyer, luxury buyer, they tend to be a little bit more diversified in their investments. So obviously with the stock market being as fluctuating as much as it has been, they're looking at, well, a buyer at that status tends to look at a luxury home more as a liability than an actual asset. So they may be holding off to see some type of normalcy or see some type of balance back in the stock market before they do purchase a luxury home. Whereas someone buying their single family first time home buyer, they're taking advantage of the low interest rates. I just had a first time home buyer got locked in at 3.25 for property under 450 in Vallejo. So there are some definitely pros to moving forward right now. And like I said, it definitely goes back down to your specific niche, where you are financially, what type of property you're looking for, what price point you're looking for. And we can speak more specifics to that particular buyer than, more of a general. But we are seeing, people being affected by the lending world, obviously by the different loans that have been changing. We've heard stories of where buyers were purchasing homes and they were at the escrow office signing their loan docs, and then all of a sudden been notified by the lender that that particular loan is no longer available. So they have to come up with an additional 10% down or an additional, lump sum of money down to secure that loan. So those are a lot of some of the changes that we have seen. And then, like I said, and then also just with the higher requirements. So FICO scores being once may have been at 700, now they're required to be at 720. So, and like I said, all that depends on this particular loan program and the particular financial situation that particular buyer is in.
Okay. Great breakdown. I appreciate that. And I must tell you, somehow our live video ended. I got us back up live. So our recording didn't end, so we can still record the whole video recorded. We can still post the entire video. But for some reason, at the 19-minute mark or something like that, somehow we went off of live. So I apologize for those of you who were watching. I'm still trying to figure out the whole Zoom going live. I've got Zoom under control, but going live and controlling it. Usually my man Benny controls and drives the car. And today he said, you know what? I'm a passenger today. You're going to be in the driver's seat. As a matter of fact, I'm getting in the back. You're my Uber driver today. So, but yeah, I appreciate that breakdown, man. That was very detailed. I like the slides because I think, number one, you got a lot of people who are so scared from the trying times that we're in, purchasing a home for them in their mindset. We talked about mindset the other day, right? So things like this have a way of closing your mindset. And when it's closed, obviously it's not open anymore, which means it's fixed now. So I hope that what you just explained opens people's eyes, opens their mindset to seeing that, okay, I can sell my home right now if that's the idea, the vision. If I'm trying to move somewhere, I can sell my home. Number two, I can obviously purchase a home because there's a lot of people out there selling their homes and putting their homes on the market. So that was a great breakdown, education-wise and motivation-wise, because once again, if you're someone in the market of selling a home or buying a home, that was just a great explanation on that there's a lot of opportunity out there. So thank you for that, Benny.
Definitely.
Now, I don't have the slideshow presentation because I didn't know we were going that far with it, so I apologize. Next time I will have that.
No need to apologize, sir.
I'll have that visual for you. But I think I can explain to people some of the market trends that we're seeing. Number one, this whole technology thing. When you're dealing with buying a home, life insurance, setting someone up for life, for generations, that requires a lot of the time, like we talked about last week, a face-to-face interaction. So although you can still see the sincerity between me talking to you, it's something said when you're actually face-to-face with somebody. So the trends that I'm noticing is people are getting more accustomed and used to this form of interaction that you can still, once again, as you touched up on last week or last meeting, that you still can see the sincerity. You can hear the sincerity. You can still pick up on my intentions, my true passion, my true purpose. You can still pick up on that, although it's through a video. And that's the number one trend, is that I'm noticing when I tell someone, hey, let's meet on the Zoom, let's have a phone conference, they're more accepting and more willing to have that conversation through these platforms and through these channels as opposed to previously. Previously, they're like, oh, no, I don't want to do it that way. Can you come to my house? And it's like, okay, I love it. I'll come to your house, but I live in Fairfield. Sometimes you get people who live in Hayward or live in Sacramento or live in San Francisco. And of course, we're going to drive because that's what the whole purpose and the mission is. But having someone now be okay with this particular form, I think is pretty awesome. So that's the number one trend. The second thing is we're noticing that a lot more people are inquiring about life insurance. I think the actual number was like 120% more people are inquiring about life insurance. So the average people, that has increased by 120%, which is pretty amazing. And so a lot of people are inquiring about life insurance, but what I've noticed is there's still a little bit of hesitancy, and there's probably more hesitancy now than there ever was before. And what I mean by that is, although people know that life is real at this point in time, that life insurance is imperative, that life comes at you fast, that life is full of unknowns. People know that. But if I just lost my job, if I'm on the brink of losing my job, if I'm on unemployment, if my hours have been reduced at my job, although I know I need this type of protection, I may not be able to afford this type of protection. So anyone who knows me knows my past. They know my history. They know my experience. I worked as a retirement specialist for 15 years. So for me, I know the difference between your working years and your retirement years. And if you don't set it up properly through your working years for your retirement years, like actually with that on the forefront of your mind, what happens is retirement comes and it is completely different than what you expected. Right, so my typical conversations, when I meet with someone, as you know, because you and I sat down several times, I'm not just talking to you about life insurance. We all know life insurance is important. I mean, they make you get car insurance. Nowadays, you get cell phone insurance. You get renter's insurance. You get insurance on everything. But we know we should have life insurance, right? So typically, when I talk to somebody, it's not just about life insurance, but I'm talking to you about preparing for 65, 70, 75. Not for just what happens if you don't come home, but what happens if you continue to come home every day for the next 70 years, the next 80 years, the next 90 years, you coming home every day. Are you prepared for that financially? Are you prepared for that real estate wise with the home? Are you prepared for that with life insurance wise, whatever it is? So what I've noticed is the trend is I can't have that full conversation. I can have it, but I really can't direct you into preparing for retirement with $500, $700, $1,000 a month, whatever the budget is, whatever your income is. Once we break it down mathematically wise, I can't tell you a $300 budget a month when really it's realistically now $50 a month. So although I can sprinkle and pepper in the conversation about retirement, it's got to be about, let's just get the life insurance in place at this point. If we got to scale it back to $40 a month, let's just get something in place. And once you're back at work, once you're working full hours again, once you're not just solely relying upon unemployment, at that point in time, we can now reassess the budget. We can increase what you put in certain places. But just getting your foot in the door, a lot of the times people don't realize that's securing your spot with insurance. I can readjust it later on. We can increase it, we can decrease it later on. But just getting your foot in the door is the biggest part. So to bring it back around, the biggest trend difference that I've seen is, once again, a lot of people are inquiring about it, but not everybody who's inquiring about it is actually taking the next step to get the insurance. That's number one, which is kind of always.
So let me ask you, you brought up a major point there, because you kind of, well, actually you kind of went over a couple different points, but, and not going backwards to where our last meeting was about, but what would you attribute, one, that increase, you said 120%, right? As far as, is that a nationwide number, or is that, yep. Okay, so 120% increase in people acquiring about life insurance versus prior to COVID-19. And then also, with that increase in I would say curiosity about life insurance, what do you think is what's contributing to them either going ahead and signing on the dotted line, signing whatever insurance they may have, whatever retirement insurance they need, just to get their foot in the door, versus not doing it? Is it primarily just because of they may have been recently unemployed, or they may be looking at unemployment, or they're not knowing what their employment future looks like, or is it that they may be looking at this as an additional bill versus
Great
an
question.
investment?
Now, a lot of people do look at it as an additional bill, which I always try and tell people, number one, it's not a bill. It's you paying yourself. It's securing not only your future, but your kids' future, your grandkids' future. If you do it the right way and you have insurance and something happens to you, your kids are now taken care of, but you get your kids' insurance when they're kids and lock their rates in as juveniles, you've effectively now secured your grandchildren's legacy as well. And if you educate your kids the right way, hopefully they're going to get insurance on their kids, which are your grandkids, and it just continues to trickle down. So a lot of people don't look at it that way, and I have to explain to people all the time, you're not paying a bill, you're paying yourself. Right. That's number one. But look, when the inquiry goes up, that just means people are online looking, typing in life insurance. That's what an inquiry is, okay? So that doesn't mean you've actually sat down with a Khalil Macklin to inquire about life insurance. That just means
there's more than you?
I'm sorry?
There's more of you?
No,
man, you one of a kind, man.
I'm one of a kind. You're not gonna find another one like that. But you know, people like Khalil Macklin, people like a Benny Bell. So if you're just on the internet and you perusing around, just inquiring about it, that gets hit as though the inquiry for life insurance is, you know what I'm saying? Somebody's inquiring about life insurance. But honestly, I probably would look for a car once a month, but I paid off my car. My car runs well. So just because I'm looking for one doesn't mean I'm buying one. You know what I mean? Right. So a lot of people are looking, but they're not going to the next step of actually putting their information into where someone reaches out to them, or maybe they reach out to someone. So that's number one. A lot of people are just on the surface level looking for it. That's number one. But number two, a lot of people still have the misconception of it being a bill. Now, from my personal experience, for people that I talk to, they see the importance of it, and people are getting their insurance set up. So that's nothing has changed in regard to people that I specifically talk to. My numbers are still the same as far as how many people I talk to, how many people are actually going to get the insurance, how many people I'm going to have to follow up with for the next 2-3 weeks before they actually get the insurance, because everyone's process is different. Some people it's a 2-3 meeting process. Some people it's a 2-3 month process. I've got some relationships with people right now where it was a 1 or 2 year process. You know what I mean? So everybody's process is different, but those are the trends that we're seeing. Is a lot of people are inquiring about it, but when it gets down to me, if you meet with me and you inquire about it, my numbers are pretty much still the same as far as the people who are getting the insurance, because I make sure I do a certain amount of vetting and make sure you are serious and your inquiry is serious and you really have certain questions, and we address them and we go through the process once again. So those are the trends that we're noticing with life insurance. Those are the trends that I'm noticing specifically, is once again, I got to scale it back a little bit and explain to the importance of just the bare necessities. We'll worry about retirement strategy and how to put money away for that. Let's get it on your mind. Let's get the insurance. Let's get you thinking strategically now. GPS, right. Goals, priorities, strategies. Exactly. So let's get your GPS on. Just because we got the GPS on, I remember once I went on a trip and I put the address in my GPS, but we didn't leave for an hour. I put the address in the GPS, but it took another hour for the kids and I to get ready to actually leave. So, but my point is, I had the GPS on though. I knew it was going to take us 1 hour and 20 minutes to get there because the GPS was locked in, it was on. You don't have to start your trip just because you got the GPS on, but you gotta turn your GPS on to know what your time frames are, to know what you're working with. So the meeting now is, let's turn the GPS on. We don't have to get in the car, but let's turn the GPS on and know where we are. Let's get this term policy in place. We'll come back and revisit how to allocate our money through Roth IRAs, through a 401k, through real estate, precious metals, through a CD account, cash value, life insurance, you name it. We'll go through all of that, but let's put the GPS on.
Right. Got to first dial in the steps. You got to map it out first. Yeah. Great answer, man. Yeah, so good talk. We definitely want to get more feedback from our clients and from our viewers, and anything that you guys specifically want to learn about, anything specifically that you want to know about, how it's affecting you and your life. And then also on a broader scale, as far as the communities, the particular neighborhoods, reach out to us. We definitely have a lot of resources in between us. We could definitely if we don't have the answers, we can get the answers for you. We just want to be a resource to you and add value to you wherever we can.
Yes, and that's the whole mission of our global empowerment team. Benny and I met I reached out to Benny on Facebook about 3 years ago, and he's so busy he didn't reach back out to me. And then I ended up meeting him at a mutual friend of ours, a mutual business acquaintance of us, introduced us. And from there on, seriously, we're so like-minded that this whole global empowerment team strategy in business just came from our first meeting and our like-mindedness, our same attitude and ambition and motivation and wanting to not only build up our families, but our community, because we understand that what happens in your community leaks back into your family. You know what I mean? So if we can put the right things in our community, our family is going to then be a indirect beneficiary of that as well. And they're going to be a direct beneficiary of what we're doing for our family. So this whole movement of globally empowering not only our community, because when we say our community, we don't just mean Solano County. We don't just mean Alameda County, where I grew up. We don't just mean San Francisco County, where Benny grew up. We mean if you're in Michigan, if you're in Florida, if we got friends in Washington, D.C., if we got friends in Arizona, you name it, call us. The strategies are still the same no matter where you are. So we're trying to globally empower not only one particular race, not one particular ethnicity, not one particular gender, one particular economic class. This whole thing, I know people who make millions, who blow millions. Yeah. I know people who make 50,000 who save millions. So this whole strategy, this whole game plan that we have is a long process as far as we're here for the long run. We're not here for just today, tomorrow. This is an empowerment movement that is going to last years. So once again, to piggyback on what Benny said, email us, find our DM us through Facebook, go to LinkedIn, DM us through LinkedIn. When we get this YouTube page started, send us comments through the YouTube page. Directly email us, whatever it is. You got questions, you got a topic that you want us to discuss, you want to be a guest on the show, follow up with us. We're here for you guys to impact our community globally. So thank you guys for tuning in. Thank you for watching. Once again, hit those post notifications, hit those thumbs up, hit those hearts, hit those likes, and we'll be back at you next week.
Stay safe, stay healthy. God bless.